Walter Davis, are liquid alternative mutual funds here to stay? They're getting a lot of ink right now, but is this a passing fad? Are we going to hear about something else later?
No, they're definitely not a fad. I mean, if you take a step back and look at alternatives as a whole, institutional investors and high net worth investors have been using alternatives in private placement form for decades now. All that's happened is the industry's figured out how to deliver many of those strategies to retail investors in mutual fund format.
So what's the best way for a retail investor to select a liquid alternative mutual fund? Because they're kind of daunting. You have global macro, you have event-driven,
Yes.
long, short credit. It can be scary.
It is very daunting, and that's why we really recommend working with an advisor. And I think an advisor is key to help a client navigate because, like you said, there's a variety of different strategies, and even managers within the same strategy can approach it very, very differently. So you need to do a screen of the manager. You need to have an understanding of what individual strategies can do within a portfolio, and more than anything, a client needs to understand what they're trying to achieve within their portfolio to even be looking at alternatives.
So how does Invesco approach the liquid alternative space?
Well, a couple different ways. I mean, just when we were getting into the space, the big thing that we had to do was look at the talent that we had inside. What were our capabilities inside that we could deliver to retail investors? So we've been managing alternatives for institutions for a number of years. And so we looked for where we've had success on the institutional side and brought those strategies to bear in the market for retail investors. The other thing that we had to do is make sure in the liquid alt space where you have daily liquidity, you have daily pricing, you have all these things within the mutual fund structure, make sure that the alternative you're delivering actually can be delivered successfully within the confines of 40 Act funds.
And what should investors be looking for when they're comparing funds? And you mentioned a few things. They should be looking at prices, they should be looking at track record. How far back should they be looking at in terms of the track record? Tell me some of those.
It's really challenging because most of these funds are new and don't have longer term track records. So you need to look at the pedigree of the team that's managing it. You need to understand, do they actually have experience managing this strategy, maybe outside of the mutual fund format, but in a private placement? Do they have experience, a successful track record in delivering to institutional investors? And then you need to really know, does this strategy line up with the liquidity requirements of the mutual fund? Because I see sometimes where people try to put a square peg in a round hole, where it's maybe in a liquid type strategy and they really need to kind of water it down to make it fit within the mutual fund structure.
What about fitting within a person's portfolio? How do you know it's going to reduce the correlation in your portfolio?
Well, different strategies have different types of correlation. You look at things like market neutral, global macro, they tend to have lower correlations, much more diversified. They can help to reduce the correlation within the portfolio and increase diversification. I think in general, the client needs to understand what is the goal they're trying to achieve and then look for the alternatives that help them achieve that goal.
And how much should they pay to achieve that goal? What about fees? It's better than the hedge fund, which is 2 and 20,
exactly.
But what is too much?
I think once you start getting north of 2%, you're getting expensive. You can look, there's a number of ways that you can look at what fees are, and certainly you want to make sure you're getting what you pay for. I think one of the big things with liquid alts is they are more expensive than traditional mutual funds. You need to make sure you're getting value for what you're paying for in terms of differentiated returns, whether it's the level of return, the correlation of the return, the timing of the return. There needs to be something differentiated and unique about what you're getting, so you're getting value for your money.
All right, thanks a lot for coming on.
Thank you.
Thank you for watching The Street.